Joining us today is a very special guest who is a well-known author and also a personal finance expert, Ms. Monika Halan. Thank you very much for speaking with us here on Times Now. This is a special series wherein we are talking to experts about their budget expectations, because whether we'll get what we want or not, we'll get to know when the budget announcements are made, but we all have expectations every year. So this year, I want to understand from you, what is it that you are looking forward to from the Finance Minister? Let's be a little realistic, because there is a lot happening around the world. So given the current geopolitical situation that we are in, given what's happening in the country, what are these one or two things that you are expecting the Finance Minister to address in this year's budget?
Yeah, I think this is a budget after a long time where I'm not seeing a story, because otherwise every budget there was something very pressing to do. Like last year, it was really important that the middle class get a break, which the finance minister did. So other than continuation of very, very conservative budget policies in terms of keeping the deficit under control, I think that process will continue in this budget as well. I'm not seeing any basic story for this budget. It is work in progress, and that's the way it should be. Because all the big decisions are out of the budget, which is GST is out of the budget. Those rates came down. Growth in FY 2026, we are clocking 7.4%, which is quite commendable given what has happened in the world. So I think it's going to be work in progress. I would imagine that there's a little bit of stress on the revenue side because of the tax breaks, both on the direct and indirect side. And I'm really hoping that it doesn't translate into, very harsh tax collection methods to meet the revenue targets of the budget, this budget.
Okay.
But I'm going to actually focus more on the individual, the micro part of the budget, and say that there are three distinct things that I'm hoping the finance minister will do. I don't think many of them will be carried out, but here I will put them out. One is that they need to take away the tax break that bundled life insurance policies get in India. These are like endowment, ULIP, money back whole life policies, which have a crust of life insurance, but are actually an investment product. These are heavily missold on the ground, especially through banks. Therefore, the reason that they're sold so well is that people are told that, look, you get tax-free money after 10, 15 years. I think this is just a sham. The finance minister should take away this tax break and make it compete on merit with other products. So that is one. Second is not to give in to the banking lobby, who's pushing very hard to remove the long-term capital gains tax, which is lower. I mean, not remove, but make it at par with the bank interest, which is again very strange, because banks steer away depositors from deposits to life insurance products, and now they want an additional benefit to be treated at par with a risk product, which is long-term capital gains on real estate, on equity, on gold.
Okay.
I think she should absolutely not blink. And there's one third one, last one, which is that the privately bought health insurance market is broken in India. The premiums go up without control. And when you actually go in to take that money from, suppose you're hospitalized, either policies are denied or you're given a runaround, or less than half the claim is paid. So I think there is need for the finance minister, and I don't know what can be done through the budget, to get hospitals, life insurance companies on one page, and then really sort it out for the individual, because the individual is getting crushed by the financial sector through certain products which are not doing what they're supposed to do. So on the macro, I think we're doing so well. I just wish we would take some of those lessons and translate it for the micro, for you and me.
Absolutely. You've touched upon some very, very interesting points. So let's, look at them one by one. And I want to first start with a salaried individual, the middle class. Now, of course, we got a lot last year. That's what many are saying. But ye dil mange more. Because, given what the situation is, do you think there is any scope at all to give any further relief to the taxpayers?
No, it's not happening. The government does need to meet its revenue targets. All that I can say is that, look, inflation is at an all-time low. So your real return rates are fairly high. And this inflation expectation which is built into us over the years at the moment is misplaced. So rather than think that prices are going up, I think we should look at our own consumption baskets to see what is it that we are spending on, right? Because inflation is genuinely at an all-time low and it is likely to stay there. So no, the middle class cannot expect anything more. The only thing I wish the government would do, the budget, I don't know how they would do it, but a lot of people will book non-agriculture income as agriculture income to escape tax, because agriculture income is exempt from income tax. So there is a big loophole out there which the government needs to really fix, because you have people running businesses who will have 1 acre and grow coffee somewhere in some plantation and will just book their income there as agriculture income. Who's going to go check? Right, so there's a problem there. Second is, we all know, and this is a problem which comes year after year on my budget talks, is that, you know what, I have no way to escape income tax, but my neighbor pays in cash for everything he or she buys, simply because they are not in this tax system. They have business incomes, they have other incomes, consultant incomes. They are out of the tax net. So what is it that you can do to bring people? And we know, just looking at the cars, the luxury goods, the spending at the top end of the market shows what the tax propensity might be. So just things which I've said year after year, agricultural income is tax exemption is a problem. You can't fix that. At least stop people who are taking advantage of that loophole to stop getting them to get that benefit. And second is just this, people who don't pay tax but should find a way to get them in. You've got big data, you are the government, Sarkar, Mai Baap, aap hain, kyun nahi karte hain?
Absolutely. In last year, a lot of people got more relief because for individuals earning up to 12.7 lakh annually, I mean, there was relief that came in. As a result, the number of people who would be paying income tax this financial year is going to be much lower. So definitely there is a need to widen the tax net. You know, an interesting proposal that I was also reading about was people who are earning, say, more than 50 lakh rupees. Some are of the view that, you know, there should be some tinkering with that particular tax rate, because right now if you see, then those who earn over 24 lakh rupees, there is a surcharge that's applicable. If that threshold, if that can move from say 24 lakh to say 50 lakh, then it will be great. What is your view on this proposal?
Any surcharge and plus cess really increases the tax rates. So just keeping in mind, so the surcharge was imposed many years ago. So just on the logic of the previous year's inflation, having raised that limit can be raised just on the premise that, look, inflation was high in the COVID years. Therefore, maybe we can increase that threshold. So absolutely, it should also, I feel also that tax slabs should get inflation indexed so that you don't have to keep raising those slabs year after year, but automatically that amount gets built into the tax slabs.
Do you think perhaps the government should now abolish this old tax regime completely, given that about 85 to 90% of the taxpayers have already migrated to the new tax regime? Because many people around us that we speak with say that, you know, it creates a lot of confusion, because if you're a salaried employee, you are being asked to, you know, look at which tax regime are you going to be picking for this year. Then you figure out whether it's going to save you more tax or not. I mean, that's something that happens in almost every salaried individual's household. So do you think perhaps there is a need to abolish it, or do you think we should continue with both the options, let people have the choice?
From the policy point of view, the government is going to be afraid to do anything which is seen as draconian, right? So immediately, suppose they were not to give a choice, the commentary would be that it's a draconian government, it's taken your choice away, oh poor you. Whereas people actually want somebody else to decide this. Most people are almost by default on the new scheme. There are a certain number of people who still remain on the old. I think it's a matter of time where once that number drops to below a certain percentage, like less than 5, it'll automatically go away. So I would imagine that the government is trying not to get those headlines of a draconian government who's taken your choice away and saying, okay, you have the choice, you decide. But say, you see that 90% of the people are on the new scheme, new tax regime. And there is another reason why this new regime works is because this web of deductions, exemptions, rebates, so exemptions still remain, deductions and rebates really complicates life. And so we've seen the headlines which are saying that the tax department has sent out how many thousand notices to people who book the deductions but can't produce the paperwork. And that's an additional cost to the tax department. So it's a cost to the individual who tries to take these deductions. There's a loophole created because people will say, oh, I have 2 kids, I pay their school fees, who's going to go check? Except now there's big data, government is checking, so it spends money now on sending out those notices. You're right. The old tax regime is going to be defunct soon. I just don't think the government is in any hurry to declare it as such.
You've been tracking personal finance, for a very long time. I also want to understand your view on how this migration is happening from the old tax regime to new tax regime. Because, earlier people used to say, at least in a country like India, we could save a lot of money, salaried individuals could save a lot of money because we were being forced to save money to save taxes. But now with that regime going, do you see a change in habits of people? Are people still saving money? Because if you look at other instruments also, there aren't like great returns that are available. And that's the reason why from people also this demand of lowering the LTCG is being made again and again, because a lot of people are now moving away from FDs and PPFs because now there is no compulsion to mutual funds and perhaps riskier assets.
I think what worked for a country at, 300 billion of GDP to a country of almost 4 trillion of GDP with poverty rates down to a single digit and India becoming a low middle income country, I think the products, processes also have to change. So yes, there used to be a compulsion because people needed to understand that savings have to be done. I think that is very clear that people need to save. And also the fact that, so no, I don't think that you need a tax break for people to invest money. And that is again, it dials back to my first point to say, please take the tax break away from life insurance. It doesn't deserve it. Right, so let products compete on merit, and that is something I tell every person I speak to. Do not buy a financial product because of the tax break, because 1, tax rules change, 2, you're not getting the optimum product for what you need. So investor need has to drive product choice rather than maximizing on the tax break which is out there. The other thing you said is that people are moving away from PPF towards riskier products. I think the movement is of additional funds. So bank deposits remain a safe product. PPF remains one of the best products. It's a gift of the government to middle class India because it remains tax exempt. Your final thing is also tax free, at least in the old regime. So, and when you look at the real return right now on these products, it's very high. Real return is your nominal return minus inflation. So if your return in PPF was 12 many years ago and inflation was 13, you were getting a minus return. Now inflation is at like 0.5 and you are getting a 7%, your real return is very high. So I think that much of understanding people will have to do that. What am I getting back? So at the moment, actually, the returns on some of these fixed return products look very good. So it's an asset allocation approach that people do need to follow, that you have some money in safe products like FDs, PPF, and the rest is in risk products. So that, I think that is work for people like me to do, to spread this education, to say, no, it isn't one or the other, it is both. Risk is important for long term, and your safer products work more in the short and medium term.
The long-term capital gains tax was increased in 2024 from 10% to 12.5%. The industry has been trying very hard to, convince the government, send proposals that this needs to be brought down. Why do you think the government should not bite the bullet as far as LTCG is concerned?
I think there is a rationalization of the long-term capital gains which has happened over the years. So till a few years back, what product went long-term when? Differed across asset classes. So equity went long-term after 1 year, real estate after 3 years, and I think debt after 2 years. There was it just didn't make sense. So what they have done, budget after budget, is smoothen that out. So they've taken away, so all debt funds, your return is now treated as income. Okay, they've taken away the capital gains part. But the other products, they have standardized that it's after 2 years of holding that your product becomes long term, and on that profit you pay 12.5% tax. So to that extent, I think the smoothening is good. Now we can always debate whether it should be 12.5 or 10 or 20. We don't know. We don't know if they actually will increase it, because at the moment, I think there is a little bit of worry that too much of retail money is coming into the market, right? So we don't even know if this is going to go up, or it is definitely not going down.
Okay.
So what I can tell the industry is just hope it doesn't go up.
Okay, so they should be happy with what they have. It shouldn't really go up. You know, there's also buzz around joint taxation for married couples. A proposal has been made for this year's budget, an option to file single or joint returns when it comes to couples. What do you think of this idea?
It will depend on the provisions. Like for me, if it means lower taxes, if my husband and my income is clubbed and we, move to a lower tax bracket, I would totally agree with that. So it really depends on what it is, and the provisions will differ, I think, family to family, depending on who's earning what and what sort of. So clubbing will look, either the incomes will remain the same, or it will go down because one partner is earning lesser than the other, or one partner, or they're earning equal. So there's a probability that the incomes go down, so you hit a lower tax slab. Or at least the surcharge rate, not slab, then surcharge rate at least. So it will totally depend on how they think this through. I would wonder what their aim is. So taxation is used to nudge human behavior. So a long time ago in Singapore, there were babies all around. So I asked around, and they said the government feels population is falling, so they're giving incentives for couples to have children. In terms of tax breaks. So taxes are always used by governments to nudge human behavior. I'm not sure what the government will try and nudge with this. So like, is there a larger direction, or it's just something? So if it's just something, then it's useless.
Okay.
But if you're trying to get more people married and filing returns jointly, then, for social stability or some other goal, I don't know.
Okay. One last question. This is going to be Finance Minister Nirmala Sitharaman's 9th budget, if I'm not wrong. You've seen her past budgets as well. So one thing that, in your opinion, is going to be non-negotiable as far as your wish list is concerned? So like, one thing you want her to do for sure, and one thing you want her to just completely stay away from?
I think what I want her to do is just continue the very, very prudent budgeting exercises that she has carried. So I have actually followed budgets for more than 20 years. And I have to tell you, what she did during COVID is to bring the off-balance sheet items which were inserted in UPA2 onto the balance sheet was a big, very bold step that she took. And I think only a woman could have done it. So kudos to her. And it's been a very pragmatic, very systematic and long-term vision that she has executed over her budgets. So I think it is just, a continuation of fiscal prudence, stepping the pedal. The capital expenditure continues. The centre actually has exhausted what it needed to do. The ball is in the state's court, but yet, rather than increase subsidies, rather than increase revenue expenditure, which goes to like subsidies and stuff, I think still press the pedal on maybe giving the money to the states for capital expenditure. And one thing that she absolutely must not do is give in to the banking lobby. Absolutely not, because the problem is of their own creating, and now they want the other financial products and other investment products to be taxed more heavily because they are too busy harvesting commissions on life insurance rather than nudging that money towards deposits. So it's a problem of their own creating. Please don't blink on this.
Well, we can only hope that the Finance Minister is going to listen to the interesting advice that you've given. Thank you very much, Ms. Monika. Always a pleasure to speak with you. Thank you for joining us.
Wonderful. Thank you.